How did you manage to do this even with the pandemic dragging on?
Yeah, the team is executing incredibly well. We just built back a better business that allowed drivers to earn all-time highs and to have our first adjusted EBITDA profit. So we're quite happy with the results.
Now, despite that, it's still hard to get drivers on the road. And I have to tell you, when I've tried to call Lyft a few times, I don't get matched with a driver. What are you doing to combat driver supply issues?
Yeah, driver supply is improving quarter over quarter. We had 50% more new drivers than in the past quarter. That said, we are coming out of a pandemic. We have a massive amount of demand coming back even faster than we expected. And so the market is getting back into balance. It will take a little bit of the time, but it is improving.
But are we coming out of it? I mean, with the Delta variant speeding up, renewed lockdowns, new mask mandates across the country, how do you expect that to impact business? How do you expect that to impact the next few weeks? I mean, are you already seeing a dent in demand or supply in the last few days and weeks?
Well, what we've said is that July was a further increase in rider demand. And as I mentioned, quarter over quarter, we had improvements in bringing more drivers onto the platform. Now we need to do that as safe as possible. We've kept the mask mandate in place. We never took that away, which was a good call by the team. And yes, as more people get vaccinated, we are seeing more people want to get out and want to see loved ones. And we're still not anywhere near where we were prior to the pandemic. But it's all moving in the right direction.
Now, I spoke to Dara Khosrowshahi earlier today. They're having these driver supply issues as well. They haven't hit that profitability milestone, but he promises it's going to happen later this year. And he says if the outbreak continues or gets worse, they have a backup plan, and that is Uber Eats. Take a listen to what he has to say.
We have the hedge, right? So if mobility gets hit because of Delta, we see the delivery business growing. And we've also stated that the delivery business is going to get EBITDA profitable by Q4 as well. So we think we're reasonably protected.
Lyft, of course, doesn't have a Lyft Eats. So, are you in a potentially weaker position if the pandemic continues because you don't have another business to rely on?
No, look, we are in this for the long term. We've been at this for many years, building out what we see as the biggest opportunity in consumer transportation. We don't need to hedge anything. We just hit adjusted EBITDA profitability in some of the hardest conditions. We have a great business, and we're going to be able to, with that focus on consumer transportation, deliver a better service for drivers and riders than anyone else. We've executed that on over year, as you've seen, against the odds when people counted us out, when people said we would get crushed, and when people said we couldn't be profitable. And so we're going to continue to focus on this massive business opportunity and take care of our drivers and riders.
Now, Uber is planning to tamp down its driver incentives in order to hit that profitability milestone. Dara seems confident they can do that and still be profitable. You guys are amping up your driver incentives. And I wonder if you see an opportunity there to win some drivers who might be used to focusing on Lyft to get them used to focusing on Uber and get them over to Lyft. What's the hard sell?
No hard sell. It's pretty straightforward. We're really happy with our strategy. Again, we hit adjusted EBITDA profitability. We had a large amount of driver incentives in the market in Q2. We're going to continue to do that in Q3. It's the right thing to do long term. We're not playing a 1 month game, a quarterly game. We're playing the long term, and quarter over quarter, we are beating expectations. Whatever the market is saying is possible for us, we're surpassing. We're going to keep doing that because it's right for our drivers and riders in the long term.
Now, John, over the last 18 months, I believe you've been joining us from home, but it looks like you're in the office today. How are you thinking about your return to work plans? We're seeing a lot of delays. Amazon just pushed back their return to work plan until January. Where do you stand right now?
Yeah, so we now have a vaccine requirement for those in the office. I feel much better here in the office doing these interviews versus when my daughters were running upstairs. It makes it a little more relaxing. But overall, we're starting to see people come back following the vaccines. We've allowed people to take up to early next year. There's no requirement for them to come back prior to that.
Now, there's still no vaccine mandate for drivers, and Dara said they're not likely to do that. They think the government should be the one to mandate that. I spoke to the CEO of Instacart, who said they're debating that for shoppers, but it could certainly impact supply issues. I mean, are you at all considering mandating that drivers get vaccinated to improve safety in Lyfts themselves, but also to help with the lack of vaccination problem that's happening across this country?
Yeah, we will look at every option. What we feel great about is that there is a mask mandate in place for drivers and riders in all our rides. We're recommending and asking drivers and riders to have the windows down. That's different in an office environment. In this conference room, I can't operate these windows. And so there'll be different requirements for different scenarios, but I feel very good about the safety of Lyft rides. I've taken some myself, also did some Lyft driving a few months back as well.
And how was that?
It was great. I was comparing Lyft driving to delivery services, and it was just really nice to see people again and interact and keep learning from the drivers and riders on how we can do better.
What did you learn? I mean, what are you learning? What have you learned over the year and a half that you guys think that you can carry forward?
I mean, over the last year and a half, what we've learned is that the investments we're making in the long term in the marketplace, the technology, the things that might not be as shiny objects to announce or launch, but just kind of grinding it out underneath the hood to improve our routing, our mapping, is paying off. It's why we can demonstrate this adjusted EBITDA profit while having higher driver earnings, while being in the midst of coming out of a pandemic and having the market not perfectly in balance. And so focus pays off. We're just going to keep our heads down and keep doing that.